All right, and we're live. Welcome to another Bitcoin analysis. We're just going to be talking about BTC for today, and then we'll move on to the different alts in a little bit later video. So for now, I'm going to stick just on BTC. It's been looking a little bit better. We've been seeing a little bit of a higher high, higher low situation, but obviously we're not looking to actually be extremely bullish just yet. But we do have a small position in, not big or anything, a bit of a feeler trade just to see how the market reacts. And I like to have a little bit of skin in the game because I do think that we are seeing some higher highs and higher lows, and we'll talk about no supply and no demand candles a little bit later on in the video. I've been looking more into volume spread analysis and integrating that into my system. So I've been working on that. So I'll get you guys up to date on a potential, not opportunity, but another indication that could give us information on if there is a lack of supply or demand. I've been looking at it for a while. I've been studying volume spread analysis for a while, but I've been incorporating like the distribution accumulation. That's volume spread analysis. But we haven't talked about no supply candle or no demand candle, so we'll talk about that in a little bit later of a video, going over within the video content. So first off, on the weekly, we do see. We'll start off on the weekly today. We do see that we're still holding above our $94, $95-ish $100 support, which is good to see. We do see decreasing volume. So the first candle had a significant amount of sell volume, and the next candle here, we still have 2 days and 7 hours-ish until it closes. But the next bearish candle here has less bearish volume, which could indicate that the supply is shrinking. And then, as you can see, in previous history, when the buy volume is increasing, there is more buy volume coming in. So shrinking volume could be lowering supply. And if we do start to see the increasing demand volume, then we could see that push up from our current support zone to our supply zone. But right now, we're just holding above our $9,400-ish, $9,500 support, and that's kind of all what we're doing, and not much more to talk about on the weekly chart. So we're going to go over, like always, two different daily charts. We have the CME futures, where we're going to talk just about gaps. Pretty big gap. We do have a wick that went all the way down to 92. So theoretically, there isn't really a gap because that movement in price actually encompassed the entire candle next to it. But overall, not a whole lot to talk about the CME futures. One thing I did notice, and one thing I do like, is the fact that there is a tremendous amount of buy volume coming in, and there's not a lot of sell volume on the downside. So that is pretty good. That means there's a lot of demand left and not a whole lot of supply, because the supply is shrinking whereas the demand is increasing. So that's a pretty good outlook, and that's kind of another indication why I'm still looking to long in this pair. I wouldn't be looking to long if I didn't think that there would be a long opportunity, obviously, and me thinking that there's a long opportunity, I still think that it could present itself, so that's why I'm looking for a long bias. Like I said before, the only time I'm going to be looking for a short bias is if we break this current level of support and then retest it. Then that would be a really good confirmation for a head and shoulders, as well as a shift in trend. And if we're able to see the volume shift as well, where we see a couple no demand candles, that would be ideal. So that's about it on the CME futures, and then we'll talk about the Gemini exchange, the 24-hour exchange. So we do see lower highs, so we're squeezing closer to the support area, but we do see that the support area held pretty well. Got a long wick down, and we got a couple candles here. One doji, and the next one looking like it's getting a little bit more buy volume, but we still have 6.5 hours, just under 6.5 hours until this daily candle closes. So we got a little bit more time. But looking at the volume, it's nothing crazy. We're kind of seeing no crazy peaks or troughs or anything. There was a little bit of a lack of demand in this candle, but that makes sense because the previous candle was a massive bearish candle. But in this candle right here, we did get a significant amount of buy pressure right after the bearish push to the downside, signifying that the bulls are still holding it and still are present within the market. So that's about the daily. Not a whole lot more to talk about. We've been talking about this nice descending trend line that could form a little bit later, but for now, we're just playing with the support here, trying to keep it above the zone. I also did incorporate a Bybit exchange just for the Heikin-Ashi on the 4-hour chart, so I can see a little bit more of the momentum. I think this is more going to be the 4-hour daily, just looking at the momentum on the larger time frames, because Heikin-Ashi allows for more of a momentum bias in a way, where the green candles are going to stay green if there's momentum. And right now we are holding a nice level of support. We do see some wicks, but the momentum is a little bit still to the downside. We do see decreasing volume, which is good to see. But overall, we're not seeing a tremendous amount overall. And the decreasing volume is good. And we'll go over the no demand, no supply candles in another video. I've been talking about those a little bit more. I've been seeing them a lot more. I am definitely still studying volume spread analysis. I've been trying to get kind of every setup I can find within the structure or the strategy, and then backtest them and seeing which one works in the crypto market. So on the 4 hour, let's just get our snip here and talk about it a little bit more. So we've been holding a nice ascending support. This is the anchor point right here. We see our first major touch, and then we see our third touch. So it's not a very confirmed area, but it's a potentially confirmed zone. We got 3 touches. A fourth touch right here would confirm it as a dependable ascending trend line. So we got that right there. We also have those lower highs that we talked about touching the lower highs there. So that's creating our resistance. So we got a squeeze in price where we got a descending, lowering descending zone and a rising ascending zone, creating an apex in the pattern, which is going to be right here. So if we are, or we do have a long position, a feeler trade in kind of around here. But for any long positions, I'd be a little bit hesitant entering or actually taking profit above this zone. So maybe here and then maybe here, but I don't know, about here, I think that the squeeze could continue downwards. So I don't want to be trying to aim for a higher high and higher high and higher high. I'd like to aim for a potentially lower high or at least the same high, maybe grabbing a wick from the top there. So don't want to be too greedy in this market. But that's about it on the 4 hour chart. As long as we're staying above this level of support, I'm looking to make some long trades. One thing that is not awesome is the tremendous amount of sell volume that was on this kill candle right there. But we didn't see it push below our major zone of support. So that tells me a lot. The fact that we didn't go below this, the fact that we had so much sell pressure and it just didn't continue. We saw no amount of sellers after that point. That to me is a little bit worrying for the sell side. And the fact that our initial dump kind of around here really didn't see much sell volume at all either. And this is really the only time where a lot of sellers came in the party. This could just be a tremendous amount of stop losses hit, as well as maybe a couple big buy or a couple big sellers selling their positions and then hitting a lot of stop losses and a lot of people who are shorting FOMO in as well. So it's not like I'm completely bearish just on that bearish candle. We do see a lot of volume accumulation before this bearish candle, but that is something to definitely take into consideration. So not a whole lot more on the 4 hour. Basically holding this, squeezing, coming closer to the apex. At this point in time, because we're kind of in a consolidation of a large pattern, we don't want to be taking on big bets, assuming that the price is going to go increasingly higher. Like, you want to see a good structure on the 4 hour and hour before you take on big bets. Like, it's okay to put feeler trades in, that's not a problem, because you can make money in between these little consolidations, or you can make money within consolidation zones. But where the big money is when, if let's say the price does come here and then squeezes a little bit closer, and this is a very, very well respected zone, then we get a break on the 4 hour, then you can really go heavy because you have a confirmation on the 4 hour, which is a larger time frame, as well as probably on the daily, that this could break towards the upside and you'd be looking for a higher low situation in that scenario. So overall, that's the outlook. Not going to get too far into it, and then we'll go over the daily. So we do have this drawn in as well. This was the potential outlook we had for this particular structure of the price action pattern, kind of like we saw here. It's kind of similar, right? I don't exactly know how similar you think it looks, but we took it out of right here. So this was this move like so. Let's see if we can mirror it a little bit. So it was right there. So this is where that initial price action came from. And then I thought that this looked pretty similar, where you get a pretty wide range like so. Maybe that's a little too wide. Kind of like so. So that looks pretty similar, right? You see the squeeze, you see the breakdown, you see the consolidation. This is the accumulation phase, and then you get a no supply, you get a push, you get a no supply, you get the same thing here, and then you get the move up. So that's kind of what I was looking at. We also do see The structure is kind of similar, where you initially get a descending zone kind of like here. You also get a descending zone kind of like here. And then you get the price to come up above a mid-range zone level of support resistance, kind of like here. You know, if you put this away and then you just put it like so, that's going to be around this zone right around here, right? So that makes sense. That makes sense. Except this is a resistance turn support. This is a support turn resistance to support. So kind of different. You could put it there. So it's initial support, resistance, resistance, support, support. But I think I'm just going to leave it like so because I was pretty happy with where it was. And then I'm going to move this. I think we can move this. We don't really need that. So I'm going to leave that where I think it was, which was somewhere like so, I believe. So I'll leave it there. But why am I looking a little bit more bullish just to here is a couple of reasons. Because we already talked about the accumulation phase right here, where it was a markdown dump phase, and then, you know, at a key level of demand, the price is going up and down. This is where accumulation comes in, and then we see that right here. I think we're seeing that right here as well, and this is the market phase, and I think we are going to expect a potential market phase where the price is going to appreciate, except we do have a major key level of supply right there around the 10K 10.1, so we do have to ensure that we have some level of take profit at here, because lower high, lower high, lower high, lower high, lower high, also in confluence with the support, resistance, support, support. So we want to ensure that we take some profits at that level because it's a zone of confluence. But overall, that's the structure of the market. We will talk about a no supply or no demand. Like, for example, the candle right here is a no supply. And then the next candle confirms that it's a no supply, and it'd be an entry signal, and that's where we entered. Overall, as well as the market structure, seeing the break of the resistance, seeing the first pullback. So let's talk about injections of buy volume, because we also incorporated that as well. We incorporated the no supply and the 2 injections of buy volume we're looking for to enter. So this is a resistance, right? We broke above. This is our first injection of buy volume, right? So we broke above. That was our impulse move. We made a pullback or a corrective move, and then we got our first injection of buy volume, and then we take a step back. And then now we have our second injection of buy volume above our previous resistance, turning into new support. So we have 2 injections of buy volume confirming that there are buyers within this area. We also see no supply where there is a lack of supply. We see decreasing sell volume coming into this candle where it's a significant move to the downside. And then we instantly see a rejection from the buyers pushing right back up. So we'll talk about the no supply in a little bit within another video just for the Performante members to see. But yeah, that's the overall analysis for BTC. Not super bullish. On the long-term time frame, yes, I am bullish. But on the short-term time frame, we're a little bit, but we're kind of in a consolidation zone. We're creating a structure on the 4-hour chart, which means there's going to be a lot of back and forth action on the 1-hour chart, which isn't necessarily so bad, but we got to make sure that we are patient in the middle here. So we're trying to enter when we hit the lows or hit the highs, kind of going back into the price action pattern. That's where you want it to enter, because then you have a solid risk reward. If you're entering at the mid-range zone, you're not really going to have a good risk reward. For example, if you're entering here, you could have a low and a stop loss just below a low there. So you kind of have that momentum to the start of the bounce once it's created the higher high, higher low, kind of back towards up this situation. But yeah, testing resistance, shorting potentially, testing demand, longing potentially. But once it gets to a certain level and the price action squeezes closer together, you know, it's getting less and less of an ideal risk reward as time goes on these squeezes for entries, because you have less of a reward that you're looking to hit, because you want to be taking profits at a support or resistance, and you're not really wanting to see or not wanting to expect the price to break out unless you're entering in a breakout trade. So that's that. That's the overall market. Not going to dive in too much more. We'll go on to the different tools that we have now. First, going over the BTC longs and shorts, and then we'll go over the coin farm exchanges that we like to go over. So let's look at the daily BTC longs first, which is going to be this guy right here. We see that, like we talked about, we hit the resistance twice, so we see that there is a significant amount of sellers at this zone. We do see a little bit of hesitation at this zone here. We did break that minor level of support right there, so we do look like we could be heading back down a little bit more. A little bit more buy volume coming in here. We do see a nice little resistance at this point and a candle closure there. So, it's hard to exactly say when the support bounce will occur like we saw here. We didn't really have an exact indication that there was a little support bounce there. Could see something like that occur again, although there is decreasing confidence in the buyers, obviously, because of the resistance, because of the initial move up, and now we're making lower highs and lower lows, kind of pushing back down. So the confidence is less than ideal for the bulls in this circumstance. And then for the sellers, don't see a whole lot of sell side confidence. We do see that sell resistance hold the price below the zone. We do see a flattening, kind of like we saw here, where it's not an initial spike move up and a spike right back down. We see the price move up, creating higher highs and higher lows, like you saw here, higher highs and higher lows, higher highs and higher lows, and then we halted for a bit. We're halting for a bit, and then we can move potentially back down because this is a key level of resistance. So we don't exactly know what's going to happen, but the sellers are right near an area. They're halted. They are unable to make higher highs at this point in time, and that could indicate a potential back down and a shift for more of the confidence for the bulls. We don't exactly know, but looks like there's definitely some hesitation from the sellers. Now, just to kind of go over, just because the sellers are losing a bit of confidence here doesn't mean that the buyers are instantly going to gain confidence. They are in a relationship, but they're not exactly correlated. So what this means is we can have both increasing buy volume and increasing sell volume, or confidence, and decreasing buy confidence, decreasing sell confidence to some degree. Like you see here, there's decreasing buy side confidence and decreasing sell side confidence. So that's a time where it's probably in consolidation. Market kind of doesn't know what it's doing, and then it'll consolidate, and then it'll find more of a setup or a pattern or a trend that allows it to kind of decide where it wants to go. So in this circumstance, we held the support, so there was buy confidence kind of coming back into the market. And then in this circumstance, at the exact same point, we saw decreasing sell side confidence, which means that the price was at least consolidating or starting to slowly go up, because you see the buyers holding an area, keeping their confidence, still entering the same amount of buy volume, not really losing confidence, whereas the sellers are losing confidence, so the price is going slowly increasing. Obviously, if you're short, you're going to lose confidence in your trade if the price is going to continue to go up. So overall market structure does look all right. We definitely are not extreme one way or another in terms of the market structure. Also not extreme one way or another. Just bouncing within the consolidation phase here. Nothing too crazy. We do see a potential support be held here, so we are looking to long, but like always, we want to make sure that we are getting the highest probability entries. And just going to put a very, very nice, clear horizontal zone there. But yeah, overall, we're going to be patient. We're not going to try to jump in too quickly on some bigger trades here. We do have a little feeler trade on BTC, but that's not too big there. And we're probably going to take profits at the zone of confluence there. So it's a pretty good risk reward overall. Might add more, but I think I'm going to stick on the sidelines for a little bit longer just to see how the price action goes. Some of the alts look pretty good. Like Dash has a nice no supply that could potentially play out for another bullish push, but we'll talk about that a little bit later in the crypto market video. But for now, that's kind of the end of the charts there, and then we'll go over the last tool we have, which is the coin farm exchanges. Do you see a little bit of a pullback? Not much sell volume on the pullbacks, which is good to see. There as well. So that wasn't a strong pullback. That wasn't a strong pullback because we see the previous volumes gain more pressure. But overall, that's it for the charts. And then now we'll go over to the coin farm exchanges. So these are the three exchanges. We can see that there's BitMEX, Bybit, and Binance. Not really in order. So we'll just be looking initially at BitMEX, and then on the 24-hour first, and then we'll move on to the 1 hour after. So BitMEX is the first one we're going to be looking at. There is more buy side confidence than sell side. There are 51.7% more buyers in the market on the 24-hour change compared to the 48.3 on the short side. Binance, basically break even, 50.8 on the long side, 49.2 on the short side. Basically not much difference. Bybit is a little bit more, 52.7% on the long side, 47% on the short side. So overall, on the 24-hour markets, we are looking a little bit more long compared to short. On the smaller time frame, just looking at the 1 hour time frame, we can see that on BitMEX, definitely more short sellers, 60% short sellers, 40% long buyers. On Binance, basically break even, 50.3 on long side, 49.7% on the short side. On Binance, not a whole lot of discrepancy. And on Bybit, quite a bit of discrepancy, more weighted towards the short side, where it's almost 70% of people that are short on Bybit compared to only 30% of people that are long. So on the 24-hour time frame, looking a little bit more long bias, not too much, not a whole lot of discrepancy, but on the 1 hour time frame, looking a little bit more short for sure. So overall, that's the outlook of the market. Not going to go and dive in too deep with those numbers there. Hope you enjoyed it. Hope you got some value from the daily crypto market or daily Bitcoin analysis that we do. Nice little support there, but I'm just not wanting to really call it bullish until we kind of see maybe the daily or the 4 hour potentially start to change. We do see on the 4 hour we do, but on the daily not so much. But for now, we're just have a little bit of a feeler position, not really anything serious, and we're just seeing how the market reacts right now. We hit a low. We got halted at $9,500 support. We were staying patient because if we were to pass below this zone, then we'd be looking to short. But we held this zone. We didn't put any entries in. We didn't put any feelers for shorts, anything, because we didn't have confirmation. We were just patiently waiting, right? A lot of trading is just waiting and waiting until you find a good situation. Yeah, you put feeler trades in. Yeah, you put trades in. But for a lot of it, you're kind of waiting for a really, really good setup. And if it's not there, you don't put a lot of your position in, you don't put any of your position in, right? You got to be patient. You got to stick with the plan, and you make a plan far in advance, and then you wait for the price action to make it a more dependable plan or dependable structure or price action pattern. And then once all the criteria is hit, all the check marks are hit, then you can look to enter. But right now, we got a little bit of a criteria there because of the no demand, because of the increasing buy pressure a little bit, because of the key level of demand that it hit, because of the break of the descending zone and then a pullback and then retesting of that zone, because of the higher high and the holding of the higher low structure, and then because of the 2 injections of buy volume, because of a lot of things indicated on the 1 hour, on the 4 hour. That is kind of why we're putting a feeler position in there. But like I said before, we're not really going to go heavy unless we have a price action confirmation of a breakout of either the accumulation phase right here or the distribution phase if we are going to short. So that's the overall market structure. I hope you liked it. And we will be doing a crypto market update very shortly. So tune in for that if you are interested. And until next time, happy trading, everyone.